Welcome back. Well, the markets have come off the high point of the day, but up only around 20 points odd. So just keep that in mind. The high of the day is closer to around the 18,050 odd, which has been rejected in Friday's trading session. The 18,000 level did get rejected. Let's see how this goes. For the time being, let's shift focus to RateGain Travel Technologies. Earlier this month, they acquired Adara. That's a data collection and management platform in travel and the hospitality space for around $16 million. To understand more about that, we're joined by Bhanu Chopra, the chairman and MD of the company. Hi, good morning, Bhanu. Thanks so much for joining in. Well, tell us about Adara first, since that's the recent acquisition that you've done. I'm going through an Anand Rathi report, which was released a few days ago, and they're quite positive on the company. And they say that by the end of this year, you'll end with revenues of close to around 210 crores. But they're saying going ahead, they're working with around 11% growth for the business. Do you think that this acquired asset, that's Adara, can grow in double digits? Point number one. And on the EBITDA front, I believe you're just breaking even approximately on this acquired asset. But the plans are that you can turn this around, and you've got a good record on that front. So for FY24, on this asset, what should margins look like?
Sure. So good morning, everyone. Let me start with giving you a little brief on this company, Adara. So Adara helps travel, hospitality, brands, and destinations win in the digital economy by providing data and measurement tools that they need to boost engagement and drive growth. And what Adara has done is really build the largest global data consortium comprising transactional and profile data directly from 275 global brands in the travel, entertainment sectors. So the consortium includes brands such as United Airlines, Marriott, Wyndham, Kayak, Trivago, Accor Hotels, and many airlines and much more. And so to your question about the revenue profile and the 210 crores, so I think what they're alluding to is probably Q4 numbers, because as of last week, we have closed the transaction. So the Q4 numbers will be built into the Adara numbers will be built into our Q4 as well. In terms of our growth, what we've been consistently guiding is about 30% growth. So this year we should end at like 580 crores. And in terms of next year growth, we're projecting, again, 30% growth there. In terms of margin profile, like you said, yes, they are breaking even. And our goal is like within the next 12 months, we'll grow the company 15% on growth and 15% EBITDA margin.
Bhanu, hi, good morning. Prashant here. Sorry, this year, these are total company revenues, what you said?
Yeah, the 570 crores is where we will end in FY23.
FY23. And FY24?
So as I stated, we are aiming for a 30% growth, but given the run rate that we will have in Q4, which is closing to about 200 crores, if you analyze that, we should be exceeding 800 crores. Our target obviously is between 900 to 1,000 crores, but on a run rate basis, annualized will be over 800 crores.
All right, Bhanu, just to clear the part on the margins, because you all have been mentioning this 30% organic growth, and margins will improve for the company by around 250 to 300 basis points. A lot of the client spends would be taking shape now, particularly your core market, and there could be some pricing cuts. So have you observed that, first of all? And have you taken that into consideration when you're guiding that margins will improve for the company on the whole by around this 250, 300 basis points? Go ahead, Bhanu.
Yeah. So, I've been on the channel before, and what we have stated is that every year we will expand margins by 200 to 300 basis points. So when we came into the markets last year, we were trading around 10%. So I'm happy to report that we are already exceeding that. And, the last quarter, if you look at, we were at 14%. And we will continue to see this margin expansion as we report on Q3 and Q4 numbers. And I'm pretty confident that trajectory of expanding 200 to 300 basis points will continue to see. And that's sort of the advantages of being a SaaS model where the operating leverage starts to kick in. And with Adara, we have a common set of customers. And given the fact that we'll be able to cross-sell and upsell to them, I do see, margin expansion as we sort of go forward.
Okay, so that is some optimistic, targets coming through. A 30% growth, consistent 30% growth is what you're looking at. 580 crores is where you'll end the year. This year, you're looking at a 200 to 300 basis points margin expansion every year. Got that? But are you seeing any signs of contract wins slowing down? I'm asking because a lot of your peers are talking about that, deals being delayed or decision making being delayed by clients. Your Q2 deal wins were at about 21 crores. Does that number improve or decline? And I think your deal pipeline was 315 crores in Q2. What is the number today?
Yeah, so without getting into specifics, because our quarterly earnings will come out, middle of February. But I can share this with you. We had the best quarter ever in terms of, new wins ever in the history of the company. Also, looking at Adara numbers, they saw some great momentum as well. Their Q3 numbers were actually beating COVID numbers also for the first time. And if I look at all our customers as well, if you look at their revenues and profitability, which is the large online travel agents, the big hotel companies, they are also reporting record revenues and profits. I mean, I know there is talk about inflation and recessionary pressures, etc. But the recent customer surveys, I think what COVID has done is change people's attitudes, right? I mean, people will, probably hold back on buying that TV or a fridge or clothes, but they don't want to let up, on having experiences. So we are not, at least for the time being, seeing any let up. And if I were to look at all the data signals that I'm getting, it is proving to be continued robust demand. And with China opening up, if there are any softness in any parts of the world, I think that will make up for it.
So your track record with respect to acquisitions has been pretty rock solid, and now with Adara as well, I think you're quite optimistic. Any more acquisitions that you're looking at in this calendar year? If yes, what's the kind of war chest that you've accumulated for it? What are the areas in which you would look to acquire?
Yeah, so as I've stated previously as well, M&A is going to continue to be a core part of our growth strategy. We've been averaging acquiring one company a year, except for the COVID year, of course. But I do continue to see, we will continue to perform and look at opportunities. So, we are very, very clear on the growth path on M&A, where we want to sort of complement along the offerings that we already have. So as you know, we have three business lines: DaaS, distribution, and MarTech. Adara actually complements our DaaS and MarTech offerings, and now we have the world's most comprehensive travel intent platform that will allow to deliver better return on ad spend to our customers. So we want to do, similar kinds of deals. As you know, the tech meltdown has created great opportunity. Adara itself was a, great deal for us, and we are hoping.
Right.
I think it's a lot about patience. We have a bunch of opportunities in our pipeline, but
Bhanu,
the value needs to be right.
Got it. Bhanu, I mean, what you're saying is music to the ears, right? I mean, solid margins, solid growth, and then margins themselves every year will improve 200, 300 basis points. Very briefly, are there any risks at all? Not the macro kind, but companies, your clients themselves developing these solutions on their own, or nothing at all? It's not going to happen. What's your sense? Go on.
Well, look, I'm, as a founder, I'm paid to be always be the optimist, but at the same time, I would, given the experience of COVID, I'm always state that I'm cautiously optimistic. I mean, from an sort of internal challenges or risk, look, it's all an execution risk now, right? So we've acquired this company. All the sort of forecasts I'm giving you, there is a bunch of execution that we need to perform on. But I'm quite confident that we will be able to deliver on it, given the past experience, because this is not our first acquisition. This is our fourth acquisition, and we demonstrated we can turn things around. But there's definitely an element of risk, with every deal that you do.
But there's big potential as well in the verticals that you work in, and you have, as you said, you have 3 verticals that you've broadly divided the business in. Very quickly, before we let you go, Bhanu, it's a fragmented industry though, right? So as a percentage of the total market, addressable market, I don't know whether you want to split it up into 3 verticals or you want to give us, as a consolidated entity, what is RateGain's market share as of now?
Yeah. So, the overall travel and hospitality tech spend is about $90 billion, but it can be broken down into front office, mid office, back office, and hardware. And what we sort of try to address is more sort of the front office systems, which is all dealing with acquiring customers, retaining them and wallet share expansion. So that itself is also a $7 billion marketplace. So if you think about, our share, we're closing in on like sort of 100 million. It's still very, very small. And our ability to continue to penetrate and get deeper with our existing customers, I think there's a tremendous opportunity. And so we've been very, very clear all along, and something I've always reiterated, that we will continue to focus on travel and hospitality.
That's a lot of details on your business and the way forward. Thanks a lot, Bhanu, for stopping by. Always great speaking with you and talking about your business as well. All the best. So that's RateGain, some optimistic views coming in there. But let's move on. This is our special segment, Quarter Se Quarter Tak. Abhishek